everyone, welcome to the first episode of TOI Wallet Talks. Finance Minister Nirmala Sitharaman is set to present the last full budget of this government on February 1st, and like every year, the common man and the individual taxpayers have high expectations on the income tax front. In this episode of TOI Wallet Talks, we are asking experts what the Finance Minister can do on the income tax slabs, major exemptions, standard deductions, and even for ease of filing returns. So first up, the most important question. Is there a case for the income tax slabs to be rejigged? To answer that, we have with us Surabhi Marwah from EY India. So Surabhi, tell us, do you think that there is scope for the income tax slabs to be changed? Is there a case?
Okay, so this is the million-dollar question, and if you ask many people around the world, they'll say 42% tax rate, that's the highest tax rate in India because of the surcharge. 42 point something actually. I would say it's been something that has been the ask from the government year on year, both under the original tax regime and now under this concessional tax regime as well. Not very sure if the tax slabs will be rejigged, but there is definitely a case for introduction of a higher limit for the 30% tax rate to step in. At the moment, it's 10 lakh rupees. Now, when we talk about tax rates and when there was a lot of talk about why India has such a high tax rate, the government said, look at the US, look at the UK, and they have very high tax rates as well. But one of the common, things that you'll see in other countries is, while they may have higher tax rates, and some may, not all, the highest tax rate comes in at very high levels of income. So you're saying, yes, make the people pay a very high tax rate, but only if they're earning that kind of income. So I would say if I were to ask for something, or if we would look at what the common person, or not common, but everyone else is asking for, most salaried people specifically, who are the major contributors to tax in India, that 10 lakh rupee limit for the 30% to kick in is very low, it's archaic, and that number needs to change. So whether or not we have a case to really rejig all the tax slabs, if we do rejig this 10 lakh tax slab, that will make a lot of difference. Because in the recent past, we have had the basic exemption limits go up, and therefore the common 95% of people or the people who are in that bracket have benefited. The people who need a little bit of change perhaps are the people in the highest tax slab, so that it kicks in at a higher level.
Okay, great. Thanks, Surabhi. So my second question to you is that the government had 2 years ago introduced a new concessional tax regime which is optional. Now, as we know, the new tax regime can be availed if you let go of certain exemptions. And most reports suggest that this has not found too many takers. So why is that? And what do you think the Finance Minister can do to make more taxpayers opt for this regime?
I'll give you an example. If there's someone with an income of 15 lakh rupees, for that person, the concessional tax regime only makes sense if the deductions and exemptions that they're taking, for instance, ATC, PF, PPF, etc., that come under ATC, interest on housing loan, etc., or the principal payment of housing loan, etc., are less than 2.5 lakhs. The minute the deductions that he or she are taking are over 2.5 lakhs, then the concessional tax regime does not make sense, because you're saying to opt for or to get benefit under the CTR or the concessional tax regime, you will have to give up those exemptions and deductions and therefore get the reduced tax rate. If you look at a common person, they are typically putting money in PF, they're putting money in PPF, people are very conscious about insurances. So for typical people with an income of 15 lakhs, their exemptions and deductions would be higher than 2.5 lakhs. So automatically, the concessional tax regime does not make sense for them. That was an example. So what can the government do? Because the government does want to bring about simplicity, they want to bring about transparency. So one of the things could be rejig those rates, make those rates very attractive. Maybe the highest tax rate should come in at 20 lakhs rather than 10 lakhs. That is the case today. Rejig those rates. Reintroduce or let people have certain exemptions and deductions. Don't take them away completely. For instance, standard deduction should be made available even in the concessional tax regime, 50,000. Let's keep 2.5 lakhs as the exemption and deduction that a person can still keep under the concessional tax regime. But yes, don't keep the entire vanilla list of 10, 15, 20 deductions. Maybe the commonly used deductions, or the deductions or the investments that a person would normally make, like PF, PPF, the housing loan, etc., insurances, because these ones the person is already contributing to or are linked to a person's saving and welfare. So if those are allowed, which is standard deduction, common exemptions, you rejig the rates a little bit more, I think the CTR could be made much more attractive to people. And at the end of the day, the government, and that's what my understanding is, that the government would like to have one unified tax regime. So if the CTR is made more and more attractive, you will find more and more takers. Ultimately and eventually, you will have that one unified tax regime, which is what the government wants, with reduced tax rates and certain and specific exemptions and deductions that are market linked, in the sense that cost linked if not market linked, and also those which people generally use. So that's really the core of the day.
Right, Surabhi. And as we know, exemptions and deductions play a very important role in the way we pay income tax. And every year there are expectations around standard deduction, Section 80C, Section 80D, and so on. So to understand better what the Finance Minister can do on exemptions, we have with us Tapati Ghosh from Deloitte. Hi Tapati. So please tell us, what is the case for the Finance Minister to make any changes in the major exemption limits?
The government is expected to relook at the deductions and exemptions that are currently available and have been static for a long time. Take, for instance, the case of Section 80C for payments and for expenses and investments in specific areas, for instance, life insurance premium, contributions to retirement funds like Provident Fund, subscription to certain kinds of shares and debentures. All of these are together capped at 150,000, which is a very low amount given the level of inflation that we've seen and the cost of living that has been there over the last couple of years. So the government may look at increasing the limit of 1,50,000 to 2,50,000 or more. And it'll have twofold benefits. For instance, it would leave more money in the hands of the individual taxpayer, and they will be also benefited by lesser tax outgo because of the income tax relief that is available. The other one that one can think about is Section 80D, which is towards a relief for medical insurance and medical expenses. There again, the limit is at a very low level of 50,000 or 25,000, depending on whether you are a senior citizen or not. Given rising insurance premiums and expenses towards medical, these levels could also be increased by the government in the coming budget. We can also talk about Section 80TTA, which provides relief to individuals for interest on savings income. And that again is expected to be expanded for interest on fixed deposits as well. The limit currently is 10,000. One may expect that to be increased to 50,000. And these are the thresholds that are available to senior citizens currently. Yes, and of course, you spoke about standard deduction for the salaried individuals. We are now in a phase where many of us are working from home, if not all the time, but at least part of the time. Our employers are expected to provide us with the necessary infrastructure and cater to some of the increased expenses at home. For instance, internet charges, increased utility bills, and of course, from an infrastructure perspective, the necessary kind of furniture and so on. These are not really benefits that should be considered as perquisites, and there should be a specific call out in the Income Tax Act to say that they are not taxable, else we'd have a lot of litigation from some assessments. It should be provided in the form of, say, a standard deduction rather than a reimbursement, because then it puts more of an onerous task on the employer to review and validate supporting documents for the reimbursements.
Right. So one ask is also on the ease of filing of income tax returns, and for this the CBDT recently issued a draft circular for the unified income tax filing form. It subsumed ITR 1 to ITR 6 while keeping ITR 7 separate. So Tapti, what's your feedback on that?
The first thing that strikes is that there is now going to be another tax form to deal with and to accustom ourselves with. We've seen the income tax forms changing over the period of the last few years, and it becomes more difficult to implement and manage, understand from perspective of a layman. But there are advantages. One would not need to choose upfront depending upon your specific circumstances and scenarios as to whether you should opt for an ITR 1 or an ITR 2 or otherwise. You would just based on an online questionnaire determine which of those questions apply to you, and based on that a certain number of schedules will possibly show up. And then you file based on your particular circumstances. One would expect that the language used in these income tax forms are simple, easily understandable by the layman, and at the same time do not go into multiple pages because then it becomes very unwieldy and unfeasible for individuals to fill up the income tax forms without making errors.
Okay, fair enough. So coming back to you, Surabhi, is there any out-of-the-box idea that you have for the finance minister which could mean good news for the common man?
The 30% rate comes in at 10 lakh rupees. We really need to change this rate to maybe this limit to about 20 lakh rupees, so that people who are coming up in their careers feel that they have a lot more disposable income and not everything is going away in tax, because the other thing is that we don't have a lot of large exemptions and deductions. So people feel that there's a absolute cut of 30% on their incomes. So that needs to change. And if the government feels that the super rich need to be taxed, then maybe we need to create a real class of super rich where we don't apply the 30% tax rate only on 10 lakhs or 20 lakhs and say, okay, this higher tax rate of 42 point some percent should apply only if your limit of income is really, really high. And that limit is something, of course, the government has a lot of data to decide on. But right now, everything is getting mixed up in terms of pretty much everybody is in that 30% tax rate. So that out of the box thinking where, finally this level of the taxpayers who are in the 10 lakh plus bracket feel that something has been done for them, because that's the ask they have every year. That could be also out of the box in my point of view.
Okay, great. So as we saw, experts are of the opinion that the government should take a serious relook at the major exemption limits and also see if the highest tax slab can kick in at a much higher income. Let's hope Finance Minister Sitharaman has some good news in store for the common man and the salaried taxpayer this budget.